Hi, everyone. My name is Cesar Augusto Hernandez Perez, a student of the Business Administration program at FAEDIS. Today, we will talk about some question and answer that were given in the virtual fireplace chat directly to McKinnon, to the president and director of the important company, the El Financiera Corporation AMC in the United States of America, Dennis G.V.'s records, and start with question based in the management of the vaccine crisis of the COVID-19 is strategies those previous service what closed and the door and the May 2020 question and answer tone and about the impact of COVID-19 on the company in the operational area. Where pandemic affects sales 2020. Dennis responded that 2020 was very hard of the company because of the pandemic speed of 3 points. Business model resilience, business agility, resistance change is slower after the crisis. Dennis size of the day versus prepared of first crisis because before they were not. Dennis talk about telecommute, which is an excellent work option for business when they are in pandemic crisis. I agreed with Dennis to the protection on the psychosocial safety of human talent and their health in general is confusing plans and they made their insolidity in the company side Dennis as entrepreneurs in technologies to ensure the use of a digital platform and electronic platform. It is clear in the time in the internet digital world, likewise innovation, important subjects, asked Toms. How should I think about earnings 2020? Answer, Dennis, as a company, you are decided remote target in the pack, they are only results. We for is acceptable as bidder tool because it is more resilient. On the other hand, then start about decision making in businesses where the damage for the crisis were permanent is improved profits. Asked Ton about credit for 2020 should continue with the assumption of the thing about these things. Dennis, everything inserting the pandemic. Ensure you answer since today we see a pandemic. Therefore, the uncertainty continues. Your company in the credits is conservative and it is understandable because the situations of the mortality and morbidity due to the COVID-19, as well as the company, most the banks and financial entities are on the subject of credit due to the pandemic they continue today. The credits are few at rates because of the rates lower according to the laws and countries for the pandemic. Their legs in comfort for people and super good decisions. Axton is buying government bond as good option. Dennis, they are have shown at the company in the environments in countries like Canada by Nick to the commercial strategy. Share the answer because Dennis are they are expert on subject. The usage in the investing in the box is used with the state and the countries is very sad and massive probability in the case in is very good option. Axton, as you're talking about expected synergies, they generate profits, Dennis. You were in conservation because you're most sure you're investing specialists in this is turbulent time with the Juragwest. At this time is the no gap thing about synergies in the projection of the company or of its sales. Tom, what about the series clash throughout the pandemic, the gold and business, then is that the distributors in the company reach bankruptcy is minimal. The risk is usually of the fiduciaries, where the company has a money flow, it causes playing future claims. The one taken the company said to the excellent management method since the marketplace futures reach specific when and the encontrar specific situation such in the pandemic acts tone are you talks about the major risk associated is act then it I sure Dennis answer since in everything in basic con a good integration word to receive rates then it's say that there and second way the COVID-19 which as another reach that late in the limited in the short time since we will return to normal. There are risks apart from COVID-19 such as transport change and consumers changing which can become an opportunity for the company. The EAX are direct distribution since they acquired the agent over time. The one what minimized the reach as well as the box sales distribution channels, which is very interesting market. Synergies can be resilient but fails in fragment market. Tal, ton, ton. Does like capital change and type of implementation capital? How should you think about all that and were done it? As a company, they have expanded in the international market also with small insurance operation and are looking for the growth of these basins in the 2021. I like that you talk about in integration of need and DAC on investment usage. The technology to have more income and be more efficient is very important. We help it the company to get aid in the COVID-19. Investment and high equality corporate bonds are maintained in the company. Acts ton capital position in the current environment is good. Done it. The company speaks of objective ranged in sensibility, very is its capital is not affected in extreme issues such as the COVID because they come to have a robust capital position as they are stable in their returns. It's not necessary for the company to have more capital. At turn, does the company need to have more capital position? Answer, done it. Almost in the becomes necessary. With in share big your answer signs in they have a robust capital and there is necessary cash flow. Their activities are positive. Better to put current capital to board. Turn up. How the thing for 2021 in the market being so volatile? Danis in the extreme market. The program designated be that company can hit the rate in the funds guaranteed. Asked Tom, what about the auto land portfolio? Dennis, with COVID 19, there is the increase in credit loss in the coming months. In 2020, there are increases in losses for the company. What Dennis says is reasonable since the loss generated by the COVID 19 were nasty throughout the world. The world. Stone. Who, do, who does the pandemic affect sales and the low interest rate? Does the company handle it? Dance. There is different position in the company for 2020 compared to the years 2008. Many measures were taken to reduce the impact of the drought in interest of earnings. The negative impact of low rate on long terms guarantee product is with the time diversified. Emphasis in the price on product and lines and basis in short change guaranteed one reduce the impact of street by 2020. Answer die is very reasonable in our concept. Conclusion. The company's must the bint around of expectation that can produce right on uncertainties. Do not wait for an event that generates and risk and happen. If not, be proactive in situation that might occur in the global market. In company, an assumption, although reasonable, must be incorrect. Therefore, there is no warranty on expected result in times of pandemic. Thank you very much.